Internationally, there's a lot more moving parts for non-US citizens that aren't subject to international taxation. Then you have a different playing field to work with.
So what's the biggest frustration you found when it comes to cryptocurrency owners wanting to exit and having huge gains and wanting to defer the capital gains tax? What have you seen? What are you doing? Talk a little bit about that.
Sure. I mean, I have an international friend base, and for my American friends, I have friends that live in Puerto Rico now. So I have friends that, knowing they were going to be in crypto longer than a year, decided, hey, I'm going to make a move to Puerto Rico. I think it's like 4%, or somebody else knows the exact numbers, but you get a massive way to save on your taxes while still living in the US and all of that. So that's one option. There's no state income tax states like Nevada and others that you can at least save on that state level. Wyoming has some innovative things going on where they're becoming blockchain friendly in terms of incorporation and clarity on tax structuring and liability. Internationally, there's a lot more moving parts for non-US citizens that aren't subject to international taxation. Then you have a different playing field to work with. So I think those are two separate conversations, but for US citizens and, long-term being over a year, that's how to think of it. Like, am I making this investment for a year or more? And if so, how to think about it? Or am I making a trade? And if I'm trading, then am I planning around that as a strategy? But it's my approach, and it's the one that I think gets the best results, that dollar cost averaging in and getting more exposure to projects you like can build that long-term capital base, where then if you do want to exit, you can take advantage of a long-term accumulated position. Now, that's one thing. I could share what else I've seen starting to come online are like qualified small businesses. So qualified small business, after 5 years, you can sell. And as long as it's in technology, research, I think financial management, those all qualify. So you could sell the business tax-free. So you sell the stock of the company. But if you go that route, you could transfer some of your crypto assets to the balance sheet of this qualified company. And then after 5 years, you can sell the company. Whoever buys the company can now liquidate the crypto assets. But that would be another way to sell, to exit a crypto position in a tax-free scenario by selling the actual company and having, of course, 5 years to play with a P&L on a company that would work with that longer-term strategic approach.
Thank you so much for sharing. That's great. Yeah, those are all, I think, strategies to consider. We also have one called the Deferred Sales Trust, where you don't have to move to Puerto Rico. It works for short-term or long-term. Now, there has to be a qualifying amount. It needs to be $1 million net proceeds, $1 million gain. But you can exit, kind of like exiting to like an IRA or a 401k, all tax deferred. And at that point, you can put it into more crypto at lower prices, or stocks, bonds, mutual funds, or real estate assets, all tax deferred. And so it's very flexible. If anyone learns about that, you can go to capitalgainstaxsolutions.com.